Good morning. This is Mayor Valensky with Driving Markets. Okay, so yesterday the markets shot up. The Dow was up more than 1.34%. The Nasdaq was up over 380 points, and the S&P followed suit. All of this happened because confidence returned to the markets. The investors began to look and say, hold on, prices are cheap. On the back of what? Well, factory orders came in much higher than expected, and that gave a big boost to the bulls, to those raging bulls that want to go out and buy the market based on cheap stock. And the stocks have come down significantly in the last few months, and therefore the bulls are looking for every opportunity to get back in. In addition to that, Jerome Powell came out and said that the economy in the US is in a very strong state and will be able to withstand all of the inflation impact and the higher interest rates. And that gave an extra boost to the investors and to the traders to go out there and buy the market. And that's exactly what happened. They just were waiting for some good news to get rid of this short selling and get rid of this short-term down spell that the markets have gone through, and said, you know what, let's get back into the markets. But the question is this a dead cat bounce? And can it hold on? You have to remember, the market from January has trended down. I've been stating over and over again on all of my YouTubes and all of my podcasts that the market is on the way down. It's trending down. So the question is, has that trend broken? If you were to look at the Russell 2000, the Russell 2000 is trying to break through its 2018 highs, but there's a resistance level there, and if it does break through, that would be a good sign for the markets overall that they're going back onto a bull run. I personally don't believe it, because it looks like a short-term technical bounce based on an oversold position in a short term within the marketplace. Also, you came out yesterday in the States, Home Depot came out, beat analyst expectations, and as a result of that, it went up over 4%. That is, Home Depot is one of the suppliers that provide, obviously, the building trade. And if the building trade is doing well, then all the other ancillary services are doing well also, and that's going to add extra profits to all the support services around the housing market. There is globally a shortage of housing. Rents are going up and property prices are going up, irrespective of interest rates rising. Interest rates are really far too low and have had zero impact at the moment on inflation or on consumer confidence, and that generally could be down to the fact that there is full employment. And when there's full employment, then what happens is there is a rising consumer confidence, and that's generally, in my opinion, what's likely happened, is that you've got full or high levels of consumer confidence based on the fact that you've got full employment, and it doesn't look like employment's going to drop anywhere near shortly. Regarding employment, you could look at the high-tech sector. As I've stated over many times, the high-tech sector has begun to lay off individuals. Well, the sun's in my eyes, 1 second. Is that better? Okay, so the high-tech sector has begun to lay off individuals lately, and we don't know if that is just a short-term factor or it's going to be something a bit more long-term, and if it does, then that's going to have a big impact on the overall economy. China data came out yesterday and was also concerned markets. It looks like there's been a fall in economic GDP in China, and that could have an impact on global markets. It was one of the bits of negative news that came out yesterday, and the markets were not impressed with that, and that has to keep an eye on it, because China, being the biggest engine in the drive over the last 10-12 years, if that goes down, or if their production of GDP is reduced, then that will have an impact on global economies. Just moving on to Bitcoin and to the whole crypto arena. Obviously, we've got the whole debacle last week of Luna and the follow-on effects. Well, Bitcoin is trying to creep up there. It is above 30,000, and that is a critical level, because 30,000 is a massive support level, and in the past has proven
that from there it moves all the way back up to the $40,000-$50,000 level. If it breaks down below 30,000, then what you're going to have a breakdown all the way down to 20,000. In my opinion, crypto is going to go well below 20,000. I think it's ripe for a massive correction, and then from there probably creep up again. As regards the other cryptos, they're just going to follow Bitcoin, and when Bitcoin goes down, then the crypto is going to go down with the whole sector. So it's something to watch. I could be wrong, it could bounce from here. I don't think so. Regarding foreign exchange, the dollar came off slightly. It's been off for the last couple of days simply because the dollar is a risk haven. So when there's a nervousness in the market, then traders and investors will pour into the dollar, and once that appetite comes back in to go and invest in the high risk stocks like the Nasdaq or the S&P or the small growths like the Russell 2000, then naturally the dollar is sold off and the other currencies will rise against it. But longer term, the dollar is on the way up, and that is something to keep an eye on. I don't think that trend is going to end in the near future. I think you're going to have on cable around about 120 is going to be the level over the next few months, even though it jumped yesterday 157 points to 125. So there would have to be a complete change and inflation and interest rate outlook for the dollar to weaken, but that's not going to happen this year. Very, very unlikely. What else have you got? You've got some shares. I don't know who plays around with linguistics, but Duolingo, which is a great application, they had exceptional profits come out on Monday, and their shares went up more than 26% in one day. They beat all analysts' expectations. So there are some shares that are not high tech that do have potentially good growth, and therefore you could look at them if you want to get more involved. So Duolingo was one of them. What else have we got? We've got Tesla. Tesla came all the way down to 720 yesterday. I've been saying for quite a while that Tesla at the 720 level looks like a buy. If it breaks down below that, then obviously it's going to 550, but 720 seems like a pretty good support level for Tesla. And that's more or less it on the morning wrap with driving markets. If you want to contact me on LinkedIn, Instagram, YouTube, Twitter, WhatsApp, etc., etc. Driving markets. Have a good day.